Greetings, members of Involution. We are a team of consultants from the University of Mauritius. My name is Sanjana, and my teammates are Sarvesh, Vidushi, and Mandira. Established in 2007, your firm is a leading FINTECH platform in China, connecting underserved individual borrowers with financial institutions. Finvolution is a pioneer in China's online customer finance industry and has successfully developed innovative technologies and has acquired in-depth expertise in the core areas of credit risk assessment, fraud detection, big data, and AI. Our team here today is here on a mission: how to use the strength of your firm to make it venture in a new market. Our presentation will encompass the following aspects: a clearly defined problem statement, Finvolution in China through a retrospective analysis of the Indonesian market compared to China, and two-service strategy capitalizing on your firm's strength. So, Mandira, can you tell us about the problem statement?
Even at present day, we can say that if there is a fintech version of Silicon Valley, it is China. Your company is already a leading platform in China, connecting underserved individual borrowers with financial institutions. Finvolution plans to broaden its horizons now. It plans to hold Pacific Rim financial technology in the far future, but for the near future, it plans to focus on Indonesia. But how to do this? How to use its strength to penetrate the new market? We've seen that the different determining factors of Chinese market help your company leverage on its strength and penetrate the Chinese market successfully. So without further ado, let's take a look at these external factors with the help of our retrospective analysis. From political answers, we can note that the Chinese government encourages all kinds of financial innovation, while the governments of many Western countries places restrictive policies on the financial industry's use of new technology. Although the Chinese central government increased regulations governing peer-to-peer lending companies, the overall fintech regulatory environment is quite flexible. Finvolution responded to these regulations and completely stopped peer-to-peer businesses and started strategic partnerships instead. Now, let's take a look at economic factors. Sarvesh?
Can I request for a timeout, please?
Do you put your micro on?
Sorry, my internet connection got lost. I had to reconnect. So can we restart?
I will carry on.
Most of China's licensed traditional institutions were small and medium-sized, which did not have advanced technologies required. Banks also lacked credit information, creating the demand for information. Therefore, the underdevelopments and gaps of this sector in China created a lot of demand, which was complemented by your company. Economic growth. The minimum wage legislation introduced in November 2016 made China progress towards a high-income country. The rising income empowered the demand for financial products as more people were eligible for loans. Inclusive financial system. Since there were a lot of underserved people in this industry, the demand for inclusive financial system consolidated the demand for fintech services. Tax incentive. The Chinese government supports these high-tech companies by a 40% reduction in their tax rates from 25 to 15%. Now let's take a look at the social perspective.
China has a large number of users due to its large population. It has the largest e-commerce industry in the world, and the data generated by this provides a strong backbone for fintech in China. Furthermore, the large community englobes a large number of people who have immediate need to borrow and ability to repay their loans, and thus Finvolution targets them. It also has a young generation who is relatively more willing to spend money, and thus this led to the boom of the online small loan market as a response to the Finvolution started targeting entrepreneurs. Additionally, the unemployment rate of China is 3.8%, which is relatively low, So we can conclude that more people are working, more people are spending, and more people are interested in borrowing because they know they have the security to repay. Of course, Finvolution, spotting such an opportunity, capitalizes on it. Technology, Vidushi?
With the Chinese market being innovation-driven, the concepts of artificial intelligence, cloud computing, and big data analytics acted as a backbone for fintech, and using these advanced technologies proved to be crucial for defining your company's success in China. Finvolution was able to move beyond the traditional ways and improved by automating its financial services. With the use of these technologies, your company was able to develop its own systems, which encompassed the 4 major components it needed for its services. This innovative approach also complemented China being ranked first in the world for the number of smartphone users. Finvolution's platform was able to reach more customers in the middle classes. And now the environment perspective.
The Chinese population as a whole is aware of how environmental constraints can have serious implications to their economy. Finvolution has developed a sustainable business model which emphasizes low carbon emission, building on its goodwill in a world that is more and more environmentally conscious. Legal, with the advent of fintech, most people thought about obtaining illegal financial returns due to the nature of its service. Therefore, in China, compliance frameworks have been established to discourage such practices, and it extends further to cases of anti-money laundering and anti-terrorism financing. Your firm has successfully abided by those regulations, and with your technologies, you demonstrated how resilient your platform is, which is also according to the FinTech development plan of your government.
From our retrospective analysis, we can conclude that FinVision capitalized on its strength to enter the Chinese market successfully. In order to penetrate the Indonesian market, we came up with a core strategy.
The strategy we came up with encompasses 3 major components to ensure how Finvolution can use its strength to penetrate and be successful in the Indonesian market. First, after analyzing the Chinese market, we saw that there were various favorable market factors that contributed to Finvolution's success in China. Are these favorable factors present in Indonesia? We shall discover that through an Indonesian market analysis. Secondly, Finvolution has 2 primary businesses, fintech services and fintech empowerment. In order to explore their potential in the Indonesian market, we have to equally understand the new challenges of the new market. Without any further ado, let's get right into it.
From political lenses, we can compare and contrast that, like China, the government of Indonesia, thanks to the re-election of President Joko Widodo, there is now a more friendly investment market and promising improvement in regulatory framework and measures to improve policies, infrastructure, and national cybersecurity solutions across the country.
Economic factors that were favorable for Finvolution in China are also present in Indonesia. The e-commerce industry is spiking, and also the projected GDP growth is 5.2% for Indonesia. Moreover, the country is one of the highest unbanked populations in the world, and the government is pushing towards cashless society. Although there are no special tax incentive, there is general government support for the promotion of fintech companies in the Indonesian market. We can conclude that Indonesia is another strategic economy quite similar to China. Social.
Indonesia has a large population whereby, as China, its highly literate population has a very positive consumer behavior towards fintech. This gives FinVision a pool of swimmers with the need to borrow and availability to pay. Furthermore, in Indonesia, one third of young people want to be entrepreneurs. FinVision, like in China, can target these young entrepreneurs too. Additionally, the unemployment rate of Indonesia is 5.8%, which, as China, is relatively low, and FinVision can also capitalize on this considering the increasing stability of Indonesians and their growing reliability in paying back. Fintech is already in the culture of China, whereby even festivals are organized. Technology.
While China is the clear leader in this emerging market of fintech in Asia, Indonesia is following suit. It is in the quest of becoming a digital economy, with fintech being one of the most promising industries. During our analysis, we have seen that consumers are increasing the use of internet, businesses are leaning more towards the use of AI, and these trends are expected to continue. This is in line with the number of smartphone users in Indonesia being on the rise, with 83.9 million users as of 2019. As we have seen, these acted as a success factor for FinVolution in China, and the same is expected in the Indonesian market.
Environmental consciousness that reigns in China can also be found in Indonesia. We have seen the commitment of the Indonesian government to regulate the development of sustainable business lines with the establishment of environmental license. Thus, our eco-friendly goodwill established in China will be a relevant success factor to operate in Indonesia. The legalities in Indonesia involve the presence of an independent judiciary system that can guarantee transparency and corporate governance. The Financial Services Authority, which is the monitoring institution that oversees financial services industry, protects the interests of consumers. The Indonesian government has a particularly slow process to regulate some businesses, which creates an environment for businesses to operate without the proper licenses. For FinVolution, its resilient credit risk model will be key to combat such practices and contribute to the government's mission of enhancing transparency.
From the comparative analysis, we can conclude that FinVolution already has extensive expertise that made it so successful in China. With the Chinese and Indonesian market following the same trends and sharing similar characteristics, your company will be able to leverage its strength to penetrate this new market. Now, let's take a look at our second part of our strategy, FinTech services.
FinVolution has two business lines, and one of them is FinTech services. This business line will face some challenges as it will be entering a new market. First challenge is competition. The fintech environment in Indonesia has grown during the past years, and the International Financial Services Authority reveals that there are more than 1,000 active peer-to-peer lending platforms in the country, but only about 160 may actually be legitimate service providers, as the sector has been targeted by many scammers. In this slide, we have listed down the main competitors that you'll face in Indonesia. How do you approach such a different competitive market compared to China? Well, our strategy focuses on the main strength of your company: an extensive knowledge of P2P services, sufficient capital, and cutting-edge technology enabling secure transactions and innovating solutions, which will be tailored according to how the market evolves. Let's now look at our second challenge.
The business model adopted by FinVolution comprises of 4 systems, with each serving a very specific purpose and having very specific characteristics. Without one aspect, the business model will not work. To successfully penetrate the Indonesian market, we will be moving towards solving the second challenge, that is finding the strategic partnerships. Here, the Magpie Bridge system is concerned for its proper implementation. We have filtered out the leading banks across Indonesia. As can be seen in this slide, these are the top 10 largest banks we shortlisted based on their total assets. Strategic partnership with these banks are very important for your company's business model to work. Interestingly, from this analysis, we can deduce another line of business. We can see, as of June 2020, there are 1,530 rural banks, 110 commercial banks, and 72 general insurance companies in the Indonesian market, which are primarily small and medium-sized with no other comparable technology. This is a great opportunity to explore another promising business line. Let's take a look at FinTech empowerment.
You've developed the magic mirror system whereby with only one click, a full assessment of risk score for each loan application is provided. The loan amount as well as the rate and duration is obtained. For this, we require access to big data, which the company already has an accumulated access to, whereby it uses multi-channels to collect a huge amount of data along many dimensions with its advanced technology. An asset that FinVolution's competitors do not have in Indonesia. The demand for this technology is high amongst financial institutions. Moreover, we can note that among the 58 million SMEs, only 12% have access to credit because of the deficiency of credit history, statements, or collateral. The Indonesian market is therefore pushing for financial inclusion. This lightens up your company's path to enter Indonesian market with a competitive edge.
The Magpie Bridge system is another system developed by the company itself. It is designated to be a matchmaker. It analyzes the borrower's features, that is, their risk profile, principal amount, and borrowing cost, and see how it corresponds with the risk appetite, credit limit, and interest rate of the lender. Usually, traditional ways of doing this can take up to 1 month. In Indonesia, the quickest way of doing so is through online registration, which can take around 3 days. But this system gets the job done in just 3 seconds. Businesses are constantly looking for ways to make this process quicker, since consumers are more attracted to quicker service. So the demand for this service is definitely present and can be met with the help of strategic partnerships as discussed earlier.
You've already developed the Bright Mirror platform, the automated fraud detection system based on analytics rules and social network analysis with a combination of the capabilities of AI. Indonesia has a high demand for anti-fraud, as according to a crime and safety report of 2020 conducted by the US Embassy. Out of this long list of crime threats, debit credit card crimes, internet fraud, and organized crimes involving illegal logging and phishing remain a problem that local authorities have not effectively addressed. With the Bright Mirror platform, not only will Indonesia be able to tackle these threats with a large database of financial fraud on your platform, but Indonesia will at the same time be better off in terms of technological development.
Moving forward, the smart customer services were developed with chatbots taking care of the inquiry system and the loan collection system being managed by AI. This fast and accurate system will definitely outdo humans since the system operates tirelessly 24/7. As such, businesses will be able to reduce their staff and their labor cost. The loan collection system requires highly skilled and experienced workers. Due to a shortage of labor in this domain, businesses are looking for such a technology, and with no other substitute present, Finvolution can benefit massively. We can see that these 4 advanced technologies result in higher level of effectiveness, higher efficiency, and lower cost. With these factors and low substitutes of these technologies, the demand is enormous, giving your company the upper hand to go forward with fintech empowerment. It can become a technology provider and offer your advanced system to third parties and earning service fees from them on a regular basis. As such, your company will be able to fulfill its aim of following the growth path of Amazon.
We have done a competitor's revenue and workforce analysis to estimate the relative sizes of the market leaders and to understand correlations. By a simple regression analysis, we can conclude that the bigger the workforce, greater the revenue. To corroborate this statement, Modagu and Amota, who have bigger workforce, earn relatively higher revenues of $15 and $20 million, respectively. We have used the accumulation of available market data to estimate your future position in the Indonesian market. Therefore, we can understand that to enter the market and compete with these current market leaders, the expected workforce size for penetration should be about 150 employees. Now let's take a look at the revenue estimation. As it can be observed, the first phase would last till the end of the first quarter of 2022, earning about $15 million from both fintech services and service fees. The market penetration phase would be the learning curve where Finvolution would be exploring local partnerships in Indonesia and understanding the market fundamentals. Afterwards, your company would transition in the growth phase, whereby it will leverage and optimize its strength, like expertise, capital, and technology to grasp bigger market shares. The estimated revenue would reach up to $75 million by the fourth quarter of 2023. And ultimately, by the end of 2025, your company would start approaching the maturity phase. At this point, the company would almost reach its full potential, and innovation would be required for further growth. However, the first and second phases would be the most crucial and would be dependent on how well the company is able to meet market demand, react and adapt to changes in the market, explore maximum strategic partnerships, and capitalize on its technology edge.
With a solid base in China, Finvolution is dedicated to facilitating the connections between business institutions and customers to create an open ecosystem, and is committed to its mission of technology making finance better. We have seen that after gaining success in China, FinVolution expressed its desires to evolve in new markets, namely the Southeast Asia one. From our analysis, we understood that this success can be extrapolated to other places in the Southeast by capitalizing on its strength being in technological edge and innovative solution. We firmly believe that this business approach that we've used in our strategy can further help FinVolution to explore other markets after establishing itself in Indonesia. Thank you, and we're now open to questions.
For the presentation, students. Now is the Q&A session. The 15 minutes countdown starts now. Let's hear the first question.
Thank you, Team Mauritius. I think it was a wonderful presentation to bringing the comparison between the Chinese and the Indonesian markets. I had two questions, please. Number one, you put up a slide on revenue projections, and the revenue is becoming stable after 2024 from $75 million to $100 million. What are the assumptions behind this revenue projections? And number two, you provided a huge list of banks, 10 banks who are profits as of June 2020 and assets as of 2020. What is our partnership going to look like, and why would the banks collaborate with us?
Thank you for these beautiful questions. I would like to invite my colleague Sarvesh to answer the first part of the question before I move on with the second one.
Thank you, Vidushi. Well, the key assumptions behind the revenue projection is by the retrospective financial analysis that was conducted by our consultancy firm. We have understood that from your past financial performance, around 68% of your total revenue comes from service fees. That is the matchmaking, that service that you provide between banks and customers. We are projecting the same ratio in the revenue forecast for the Indonesian market. Now, we have understood that there is around 83.9 million smartphone users and out of these 83.9 million users, around 50% do not have access to credit. They do not have credit history, so they do not have access to finance. So which represents around 42 million users, and we are targeting 1% of these 42 million users during our first phase, which will be around 420,000 users. And for the service sector, for selling of technology product, we are assuming that around 100 units of technology product of our products, like the 4 technology that we have developed, would be sold, and a service fee of around 50,000 USD, which is common in the Indonesian market for other financial products like Oracle Financial, which is a software. So 50,000 USD per year is the average in the Indonesian market. So we are estimating for the first phase 50,000 USD for 100 technological projects, which will be 5 million USD, and comparatively using the ratio of service to technological product, we can understand that 10 million, the other 10 million will come from service, that is the matchmaking service. And the same trend is projected throughout the growth phase. Growth phase would be a period whereby we have been able to capitalize on our strength and make maximum strategic partnership, which my colleague will later address in the second part of the question. And the first and the third part, whereby we are reaching the maturity phase. We all know that technology products and even fintech industries do have to innovate constantly, and therefore we are estimating that by 2025 our products, your products, will reach a maturity phase, and more innovation according to the Indonesian market will be needed. I now invite my colleague to address the bank part, the bank strategic bank part. Thank you.
Yes, thank you, Sarvesh. Coming up on the second part of the question, well, FinVolution is a giant and already has a background with all the success it has with its strength in China. And as we've seen, based on the comparative analysis we've done, the Indonesian market share various similar characteristics, and the banks we believe they will accept this strategic partnership, since it will be a mutual gain, and a higher gain for them, since there's no such comparable technology present as FinVolutions. We have innovative and completely new technology, and so it with our systems, technologically advanced ones, we are able to better match a consumer's profile with the institution, carry out a very detailed analysis assessment very fast, like in one click. And so they will be able to benefit from our financial resources and technology, while we will be able to learn and adapt to the Indonesian market. And also the technology part, where we will be lending them to third parties, as I mentioned in the strategic part, we will be earning service fees. So it's a mutual gain between FinVolution and the strategic partners, that is the banks. Thank you.
Thank you.
Thanks for the very in-depth analysis of the strength and a very detailed comparison between China and Indonesia. So may I know, for this proposed strategy, can you elaborate more on what are the potential risks and how are you going to mitigate those risks?
Thank you very much for your question, ma'am. I would like to invite my colleague to further elaborate on this.
Thank you, Mandira. Well, one of the greatest risks is that we have analyzed the competitive environment by looking at the local firms currently present in the Indonesian market. And one crucial factor, one determining factor would be what would be the international competition reaction, our international competitors, because we have understood that the Indonesian government is promoting financial inclusiveness and promoting fintech industry. So it is inviting other big fintech giants to enter the market. So international competition would be another great factor that we have to consider. Now, concerning how to mitigate it, again, China itself, it is ranked 21st according to the global index in the fintech industry, 21st country, which is really competitive in itself. If our company has been able to survive in such a competitive environment because of our technological edge, because of our innovative technologies, we believe that in the Indonesian market, we'll apply the similar principles and understand the market fundamentals and adapt to the market changes in order to mitigate this risk. Another important risk would be to consider the culture. We have understood that from the Chinese economy, people are used to online sales, to the online services. So therefore, online financial product is part of their lives. It's already integrated the Chinese economy. But will the same culture apply in the Indonesian economy? This remains a question mark. But how do we mitigate this strategy, this risk, is because we have understood that the COVID-19 pandemic has brought a lot of momentum in this process of getting online. And we believe in the potential. And the government is also promoting cashless society. Therefore, again, the second risk would be the second risk of culture is really getting bridged by this COVID-19 pandemic with more people getting online. So that would be our risk and risk. Thank you.
Thank you. Thanks.
Thank you. So I think this is a very good presentation, and very informative and granular. So I think you have been putting a lot of analysis on the Indonesia and the comparison between China and the Indonesia. How do you see the biggest changes that you need to make to address the cultural difference or the country difference between Indonesia and China in order to make it work for the China to leverage on your strength of the business model in China?
Thank you for this very beautiful question. Well, we have understood that there are quite many similarities between these two economies. In terms of tendencies, in terms of trends, but again, there are differences. The first difference that we have identified is a different competitive environment compared to China. We have different competition in Indonesia. And the second difference that we have noted is one of the critical success factor of your company in China was its strategic partnerships with the banks. And again, in the Indonesian economy, to adopt this, we are proposing, by the way, to enter the Indonesian economy with the same model, basic model, which will be adapted to the Indonesian economy. So we have to look for strategic partnerships in the Indonesian economy. So the major two differences would be competition and partnership, which my colleague Sanjana and Vidushi can elaborate a little bit more.
Thank you, Sarvesh. If I can talk about cultural differences in terms of practices and values, we can see how in China is already a competitive market. If Finvolution has established itself successfully in China, I think it can really adopt its strength to resist the cultural change that happens in Indonesia when we are comparing to China, or even the other Southeast Asian countries that it can expand on, such as Singapore, Philippines, and what has been said in the case. If I can say how to mitigate those cultural differences, we have seen how in China it has gained success despite the various regions have different cultures, if I may say. The app in itself has an integrated service which is so user-friendly can adapt to anyone's culture. So I think that's one way to mitigate such risk of culture, is that to adapt our app to the Indonesian culture and provide better services to match their culture and values. Thank you.
To add on the partnership challenge on this, I would just like to say that it will, since it's a mutual gain, this challenge is, we have already provided to mitigate this challenge, since it will be a mutual gain. The banks will be going forward with the partnerships, and so we can go forward ahead. Thank you.
Thank you.
May I ask one more question in terms of the partners? How would you compare the partnering with banks versus other e-commerce? What are the pros and cons, and have you evaluated that before you conclude that banks are the right partner?
Thank you very much for your question, madam. This was a beautiful question. I would like to invite my colleague Vidushi again to elaborate more on this.
Thank you, Mandira. Well, ma'am, to answer your question, yes, we have put the largest banks as our strategic partners, but this will be for the initial stage, for the market penetration phase, because these are the largest banks. They dominate the market entirely. So it will be a good platform for us to get to know, learn, and adapt to the Indonesian market. And as we move along in the growth and the further stages, we will definitely be partnering with other small and medium-sized like e-commerce businesses and other like the insurance companies.
And to complement this answer, I have done an analysis on the different banks, and they are open for strategic partnerships, which we will be exploring. So banks have already expressed their interest in getting into strategic partnerships to ensure their effectiveness and more efficiency in their banking services. And they are the ones who really need fraud technologies, really need and can afford fraud risk technologies, the risk mitigation technologies that we are providing. So again, the banks would be our main target, because they have the demand and the ability. So they have the demand is effective for banks. So thank you for this question.
Thank you. Thanks. I don't have further questions.
Thank you, ma'am.
Thank you.
Thank you.
Now we still have time for one or two good questions. Judges, do you have any further questions?
Maybe a quick one. You have emphasized the importance of the partners, to help you to go on this regional expansions from China. So maybe can you elaborate a little bit more? What's it for them? Of course, they are, it will be good for them to supporting our growth to those countries. But what is the benefit for them?
Thank you for this question. Well, upon analyzing the banking industry in Indonesia, we can understand that it is a quite competitive industry, and the top 10 leading companies are as enlisted in this slide. But we have around 1,530 rural banks and 110 commercial banks. So there is a competitive environment in the banking industry. And because of this, banks in Indonesia are constantly looking for ways in which to optimize their operations and become more effective and more efficient. And considering the current technology market in Indonesia, upon our analysis, we have not found technologies that are comparable to our products, to your products that you have developed. So in terms of risk mitigation, which is a crucial aspect of the banking industry, with just one click, you can get the risk profiling, the loan rate, the loan duration, loan rates that will be suited. With just one click, within 3 seconds, you will be able to find the lender's requirements and match it with the borrower's profile. So this level of efficiency in the banking industry is what banks are looking forward. They have already expressed their strategic intention to go into strategic partnerships with such leading such leading technology companies in order to optimize their strength, their level of operation effectiveness.
Thank you all. Thank you all.
Thank you.
Okay, that's the time. Okay, judges now will stay in the room to deliberate, and students, we will place you back to the waiting room and bring you back in the feedback session in a few minutes.